Hi friends, and a very warm welcome to the monthly macro update. Today we are going to be talking about the GST, that is the goods and service tax. This structural reform has been waiting to happen since quite some time now, and it aims at unifying all the indirect taxes in India. Recently, the panel that has been chosen by the government and headed by the Chief Economic Advisor has proposed its suggestions to the government. We'll be briefly discussing about these suggestions and the overall impact of GST implementation in India on inflation and growth. To begin with, the panel has suggested a revenue neutral rate of 15 to 15.5%. It has also proposed that the GST be implemented in a three-tier structure. So you have a standard rate of around 17 to 18%, which will be applicable for most goods and all services. You have a low rate of around 12%, which will be applicable for most essential goods, and you have a high rate of 40%, which will be applicable for luxury goods and tobacco, etc. The panel has also suggested doing away with all interstate trade taxes and also the additional levy of 1% that has been imposed. And the third suggestion that the panel has made is the inclusion of products such as petroleum, electricity, real estate, etc. in the ambit of GST. However, these are only recommendations, and the final decisions with regards to the GST structure, the actual rate, will have to be decided by the government. If we move on to the target that has been set for GST implementation, that is April 2016, we believe the target is very difficult to be met. So while most of these suggestions are in line with what the opposition actually wanted in terms of specifically the revenue neutral rate, we believe there will be a lot of glitches in terms of implementing it by April 2016. First of all, the constitutional amendment bill needs to be passed by a 2/3 majority in the parliament. It also needs to be approved by the upper house. In addition, post that, you would want at least 50% of the state assemblies to approve this bill. Even after the consensus has been made between the government and the opposition, the actual implementation in terms of the operational part would have a lot of glitches. We believe this will delay the implementation at least up to April 2017. Let us now talk about the impact of GST implementation on growth. So for India, if we consider the near-term impact, we believe there will be a very minimal impact either in terms of the revenue collection or overall GDP growth. But if we talk about on a medium-term perspective, the implementation of GST would kind of facilitate business. It would kind of lead to a free market on a pan-India basis. It would bring down the cost of doing business. It would increase efficiency as well as overall productivity. On a medium to long-term perspective, we believe GST implementation could boost productivity in India. In addition, any kind of additional revenue that would be likely because of GST implementation would give the government some more fiscal room to take up additional capital spending and hence boost growth. So roughly around 0.7% to 1.2% of GDP could be added to the overall GDP growth for India over a medium-term perspective. Moving on now to the impact on inflation. Currently, almost 80% of the CPI basket is taxed at a rate which is lower than the current service tax of around 14.5%. With the implementation of GST and considering a 17 to 18% effective standard rate, roughly around 25 to 30% of the CPI basket will be taxed at the new rate, which would push up the services inflation in India and hence is likely to add around 60 to 70 basis points to the headline CPI inflation. On the other hand, this increase in the CPI inflation would be lowered by the taxes on goods. So currently, when your goods are being taxed at roughly around 22 to 23%, the effective rate on these goods will be brought down and hence the cost of goods will be lowered. So roughly the impact on inflation is likely to be negated. The higher end on the services is likely to be negated by the lower inflation on goods. So broadly, on an overall basis, the impact on inflation is likely to be minimal. On an overall basis, so while most of the suggestions of the panel are in line with the opposition and are likely to have a positive impact on growth over a long-term period, we believe the implementation will still take some time, and April 2017 is what we see when the GST is likely to be implemented. To have a look at our monthly macro updates on a regular basis, you can subscribe to our channel here.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.